Hi all, my name is Varun and welcome to the channel BLISSTRADES Technicals. In this channel, I will try to give you some perspective of how I use technical analysis and at the same time make some money using that analysis in stock markets. I have been getting some queries very frequently regarding discussing some intraday methods which can be used on a continuous basis and at the same time make some consistent money from the markets. So instead of putting out a blog post or sharing it with few on Twitter, I decided to make a video and upload it on the channel. The data points which I am using for this method are basically three: PDH, PDC, and PDL, which is previous day's low. So we have the previous day high, we have the previous day close, and we have the previous day low also. The strategy, what it says is whenever the price opens below PDC and at the same time PDL, the trend is bearish for the day and we can have a waterfall day. And at the same time, whenever the price opens above PDC and the PDH, we can have a good rise in that index or a particular stock for that particular day. So let's have some examples. We'll start off with Nifty itself, and this is the data for 22nd of September 2017. uh, these horizontal lines basically are the data points which I have just spoken about. So in this case, this is the closing of Nifty for 21st of September 2017. So I have marked it with a horizontal line. This is my PDC, this is my PDH, and this line over here, let me grab my horizontal tool, is the PDL. So on 22nd of September, you can see the price opens below PDC and PDL both. So it becomes even more bearish for that particular day. So when this criteria fulfills itself, we need to take a trade. Now, the first criteria is price has to open below PDC and at the same time below PDL. Many a time I only watch out for PDC alone, but to make it more strong, I wait for PDL breach also. So once that criteria gets over, the second thing which we need to wait for is the formation of the first 15-minute candle. So in this case, after the formation of the first 15-minute candle, you can again draw two horizontal lines at the low and the high of the first 15-minute candle. So after this, you need to put orders. I basically use SLM orders for filling up my orders. So the orders which you will put here are: for sell you will put 10065, and for buy you will put above 10099. The beauty of this strategy is even before getting into the trade, we would know what our risk is. So in this example of Nifty, if we calculate, my sell order would be at 10065 and my buy order would be at 10099, right? So whichever order gets filled, the other order obviously will become the stop loss. So here we are working with a 34-point stop loss into 75 is 2550. So we are risking 2550 max. So even before getting into a trade, even before my orders get filled by SLM system, I know that the risk in my strategy is 2550. And if I get a good move, which I basically got on 22nd of September, let's see where the price closed at 3 p.m. I chose to scare off at around 3 p.m. So 3 p.m. close was at 9985. So again, 9985 minus 10065. So that's 80 point. So I have made around 6,000 bucks. So we have reached 2550 to make 6,000. So that becomes basically a 2.35 hour trade, which is not bad on a given day. Now, the same strategy can be applied for stocks also. So, for example, Tata Steel. For Tata Steel on 21st, the PDC was around this point, and we also have the PDH here. So on this day again, the price opened below PDC and below PDL again. So, so you will be bearish for the stock again on this day. So, as per the strategy, you wait for the first 15 minutes and wait for the candle to get completed. Now, here again through SLM orders, my sell order would be at 675.15 and my buy would be at 682.80. So 682.80 minus 675.15, 7.65 is my risk. Now, how do I position size here? For, imagine I have a capital of 1 lakh. So I divide 1 lakh by the closing price, that is 675.25. So it's around 148 shares. So you can round it off to 150. So 150 into 7.65, which was my risk, is 1147. Again, we'll cross check. 150 into 7.65. 1147 is my risk. So I know before getting into the trade that 1147 is my risk. I don't know anything about the profits. Profits could be anything, or either I can have the stop loss being hit. So 3 p.m. close was 651.75. 651.75 minus, I started at 675.25. So 675.25, that's around 23 points, and my shares were 150. So I can make 3525 and I have risked 1147. So again, this was a 1 is to 3 hour trade. Another example I can give you is, I just pick up Reliance Industries here from my chart. See, here you have the PDC, right? And we had the PDH on this day here. So this was on 19th of September. So 20th September, you wait for the first candle to get finished, and you put orders, buy order here, and again the sell order here. So you can calculate the risk here, the high and the low, that is around 25 bucks. So here position sizing again becomes very important. The close here is 861. It is 116 shares into 25 bucks. So you have a risk of 2903. So start of the day, you have to decide for yourself that what is the kind of risk I'm taking on the particular day. Only then you can go ahead and execute this strategy.